As we have been covering, Google's reorganization will potentially give it more freedom to invest in so-called moonshot projects. Insight Venture Partners Managing Director Deven Parekh is with me now. So, Deven, as a tech investor, does this change anything that you do at Insight?
No, I don't think it changed anything what we do at Insight. We're obviously only invest in private companies. And I think it was a smart strategy by Google, though I think less around necessarily transparency, because there's lots of ways to provide transparency, including just simply doing segment reporting. But I think that what it does do is allow them the flexibility from an HR standpoint to create independent entities and be able to recruit A-class talent who want their own CEO jobs.
All right. I want to focus, though, on your news. At Insight, you have just closed a $5 billion fund. So what does this say about demand, especially for software and cloud software companies?
Look, I think that the demand for the software remains unabated. I think that it's the largest productivity-enhancing investment that most large enterprises are making. And if you look at today versus the last time, 1999, 2000, when you had kind of a perceived high valuations in tech, the difference is if you look at the customer base. The customer base back then was venture companies buying from other venture companies, funded by venture capital. If you look at our customer base today, it's large enterprise companies like Apple, like Google, who are basically implementing these products within their enterprise to basically get higher productivity.
I want to ask you, though, picking up on that valuation theme, I read a post the other day that said, you know what, investors can get so much more value from public companies because the private valuations are so sky high that companies, and I'm not trying to be specific in saying Intel or Apple, but they're like a great deal if you compare them to what's happening in the private market. From your perspective, because you know both, how do you see things?
What I would say is it's very hard to find public companies, by and large, who have the growth characteristics of some of the private companies. So while it's true that the actual multiple that a public company might be trading for might be lower than we're paying in the private market, what we are seeing, though, is companies with growth rates that are not growth rates that I can find as a public investor. Now, are there examples of companies in the private markets that are getting priced at premiums to public companies with a growth, even with the growth adjustment? Yes, we tend to try not to do those deals. So we're looking for relative value, but relative value is not just, it's relative value based on growth. And growth is kind of where we focus most of our time.
All right, so let me ask you, with the $5 billion, do you ever worry, I'm sure you don't, but I'm just curious, that's a lot of money to have to invest. Are there that many good ideas out there that you're excited to invest in?
Well, look, the good news is that these are long-term funds. This is a 10-year fund. So if the opportunity set doesn't come up, we can take our time to invest.
You can be patient.
Right now, the opportunity sets have been good, and we've been able to find pretty interesting opportunities. But there's no pressure for us to be able to have to invest this money quickly. Our investors give us the flexibility to make investments when we think it makes sense and to not make investments when it doesn't make sense.
Do you have more pressure on you at Insight, that is to say, to find the company that's going to deliver 30x versus maybe 10 years ago where you could have a few at 20x?
No, I think if you look at our portfolio, we have a pretty diversified range of companies. So one of the things we've worked really hard to do, even as our fund size has increased, is maintain our flexibility to continue to do small investments. So you'll see announcements of deals we've done this year, and you'll continue to see announcements of deals that are $20, $25 million investments, because our view is that this is not just about a game about deploying capital. It's to drive the best returns and the most exciting companies backing the best entrepreneurs. Sometimes those are big investments, sometimes those are small investments. And I think we've worked really hard to build an organization where the most boring part of this interview will be that our strategy is staying pretty much the same going into Fund 9.
So, Deven, I want to ask you, whenever I use a work-related so-called enterprise software, it's like 1,000 times harder to use than anything that's meant for me as a private individual, citizen, consumer, however you want to say it. Is that gap narrowing? That is to say, are the tools that we use at work going to get as easy as the ones that we use at home?
Right. You need to call Roger Ailes and get a bigger budget. It's consumerization of the enterprise is what we call it, which is that my kids, your kids, are used to using Android and iPhone and applications at home that are very, very easy to use. And they're demanding the same in the applications they use at school. So if you look at a lot of the SaaS applications that are being implemented today, software as a service applications that are being implemented today, there's a lot of focus is being put on UI, which is user interface, and trying to make that user interface look much more like a consumer-oriented application. for ease of use.
All right, so the gap is closing.
The gap is absolutely
awesome. Looking forward to it. Deven, congratulations on the fund. Thank you so much. Deven Parekh from Insight Ventures.